Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Tuesday. And we are now at April 28th. 2 more days to the month. And the time right now about 4:10 in the afternoon. So the gold market finished down $1.60. The last quotes of the day were actually about 80 cents higher on the day. Silver was trading at $15.34 and you were down a bit in the copper. I just happened to be looking at the last quotes when it was occurring. In the stock indices, actually you were unchanged at the very last ticks of the day, and the Dow maybe a little lower. Down in the NASDAQ, the S&P. The strength has been 5 days in a row in the Russell, so what we can see, and you don't need to be a genius, is there's a rotation going on at month end. And these small caps have gotten back into favor to a degree. 5 days up is nothing to sneeze at. But in the metals, I like what today did because it went back to key moving averages and sort of held in the gold market. Not a buy signal yet. We'll talk about this. If we take a look at what gold's done on a weekly chart of just closing prices, the highest weekly close so far is 1736.20 on this chart, and we can go back a few years. It's been a while. So that's what this market has done, and right now we're off of that by about $26. Something of a correction going on, but not a deep one. I think you'd agree with that. When we look at a bar chart here, we can see the market's trading in this pattern. It's almost got a pattern of a spike high, a drive to a low under these lows, and you just came back and you're playing inside of that. That's the feel I get. When I put the swing lines on, I have a clear pattern of lower highs and I have lower lows. So the trend is defined by the swing line is to the downside, and it is a trend. The trend can be defined, an uptrend is higher lows, higher highs. Downtrend, lower highs, lower lows. No trend has in some manner a higher high and a lower low, but not a stepping ladder. Got it? It just keeps widening itself out in some manner. What gold did today is it fell back to what I call that line in the sand, just the way that it did back here. And again, it held at that number. Now, I had one of you write and say, I thought you were bullish gold, Ira. Number one, I'm a chartist. So I change as the chart changes. That's number one. If you were asking me my fundamental opinion, yeah, I'm a long-term bull in the gold market. How could you not be with all this money that's being printed? That doesn't mean I'd be right. This is what rules the pocketbook. And if you stop throwing this away and go to your other thoughts, you probably, I wish you the best. But you can't use the leverage in the futures markets if that's what you're doing. And that's because the leverage goes either for you or against you. And unlike the stock market, it's 90% leverage. You want to be cautious. This market fell back to an area where it found its footing. But we don't have that pattern of higher lows, higher highs. We have the pattern where the swing line's down, but because you're over the 18-day average, the two counter each other. When we look at where the resistance point is, it's the Bollinger Band. Yes, I know you went higher, but that's really what is containing the market, is this band up here. The market's not been able to get to it or even above it. It got to it back here. It got over it here for a brief time, and then it came down. But look at the pattern it came out of when it did that. A compressed pipe pattern. You don't have that right here. When I look at momentum, now you've got everything discombobulated. How's that for the word? You've got momentum down, bias up, swing line down. The market's not in a setup. That's the way that I would define it. When I look at the gold-silver ratio, it's just going sideways. Somebody's watching it, don't know what they're doing with it, but the market's just been doing this for days. You don't see that on the chart in other areas. So that in itself is unusual to me, and it has my attention. You know, look at patterns, and you start getting feel for what's going on. Silver is down. Silver's in a downtrend with a settlement under the 18-day average. You'd have to get over 1563.50 to negate that. Should it get legs to the downside, because momentum's pointing down, bias is down, well, wherever this lower Bollinger Band is right now, it's from where we're at now, 80 cents lower, but that's the support zone for it. Now, there are some other numbers called window envelopes, and if you're a subscriber to my morning update, you see these numbers because I give you with the window envelopes and all the other tricks and tools. This is the lead-in to my subscription video. I hope you understand that. That's what these all are. When we get to the copper market, you have a lower low, a higher high pattern. Folks, that is not a trend. The bias is clearly up because you're over the 18-day average, but you're also overbought and not converting to the upside. We're in earnings season, market's getting more economic data. You know the data's not going to be good, but that doesn't mean anything because you know that, the president, the Kevin Hassett, they're all telling you start looking at the end of the third quarter to the fourth quarter. That's when you'll see things picking up. And they're right as long as, none of them say, but there's an as long as we don't get a resurgence of the COVID coming back. Because if that came, throw out all that. I don't know where we go at that point, but that throws everything away. And with now, 9 states or so about to open or in opening stages at this point, we're all watching it. We want to see what happens. We also want to see how creative America gets in reopening. How do they go about it? When we look at the platinum market, momentum flattened out. The trend is up. Higher lows, we have higher highs. The defense numbers, you don't want to see this market under 764.60, which tells me the bulls they support the market at 767.40 if it gets back there? That becomes their interesting question. From here, that's a heck of a drop. You're 795 right now, so it doesn't look like it. That's $28 away. That's a long way off. I don't know. The reason I don't know is if they did that, you're going to end up with lower highs and you're hoping to keep your higher lows. It's not the ideal trade pattern. In the palladium market, the market's riding the lower Bollinger Band. Yes, it got under it, came back, and now it's just sort of riding it on the way down, and you've got momentum here. Now, if you take out 1850.210, and today's low is 1860.250, that will break this little bit of an upswing that the swing line offered you that was fully countered by this move where the 18-day average got under the 100 and where you had a bearish crossover where the 18 got over the 100, putting more downward pressure on the market. The good news for platinum and palladium, car manufacturers say they're going to open May 18th, which means those factories are getting ready. You don't just turn on the lights in a car factory. You got to make sure your suppliers are all lined up. Everything's automated, so you've got to make sure all the chains of supply are in place. It's a gradual ramp up. It's going to take time. It could take 3 weeks, but it's a beginning. In the dollar index, you're void of trend. As I expected, and I mentioned to you, this pipe that we've defined here, now you're starting to get that whipsaw back and forth right against the 18-day average. This is where traders get chopped up. Even if you fall to the lower band, the odds of staying under it aren't the best. It could happen, but you're in that whipsaw. You got to break out of this one way or the other before I would want to see anything of substance really happening. I want to remind you, not only do I offer my writings twice a day if you're a subscriber of mine, but Linn offers free a trial to their writings, and they're all day long. So whether you're trading in the metals, you might like to see our Paul Hare, who puts out his chart points on the market. I've known Paul 40 years, so I know how good he is. And he gives you his numbers during the day. A lot of what they do at the Linn is oral. So if you get our chart platform, you go in, you listen to the median. Now let's assume you're not by it. So what? It's all recorded. You go in, you can listen to the metals. You like David Hightower? He's there. Others are there. They're talking about it. I am not up on that. I have my own subscription service, so as you know, I run things a bit different. But to get our free trial to all this, go to 866-973-2077. My staff will take care of you, or you can go to our website, www.iraepstein.com, and under the word research, go there. You'll see everything that we have for my stuff, or free offerings are on the bottom right. I'm Ira. You have a good day.